Did Paul Pelosi, the financier husband of House Speaker Nancy, profit off of insider Beltway scuttlebutt in June to make about $5 million on options contracts tied to Alphabet stock? On Wednesday evening, Bloomberg News published a report titled "Pelosi's Husband Locked in $5.3 million from Alphabet Options," which carried the subheadlines, "Action was weak before House panel considered antitrust bills," and "Antitrust bills target Alphabet's Google, Apple, Amazon." The story followed a Fox Business News piece looking at Pelosi's June trades, which were laid out in a July 2 disclosure form. Both stories raise a connection between Pelosi's trades in Alphabet and a House Judiciary Committee's vote on a number of antitrust efforts aimed at big technology titans like Alphabet, Amazon, Apple, Facebook, and Microsoft. Some of the bills, which advanced from the subcommittee in July, aim to limit the market power or break up the companies entirely. After politically charged investigations of senators' stock trades in 2020 at the onset of the coronavirus crisis, sleuths now comb the financial disclosure forms of congressional leaders for hints of insider trading. When asked by Bloomberg, Speaker Pelosi's spokesperson Drew Hamill said, "The Speaker has no involvement or prior knowledge of these transactions." So was there anything improper about Mr. Pelosi's trades? A few critical details indicate not. In fact, the story seems to be that he made one heck of a trade. The trades in question involve 40 call options on Alphabet stock at a strike price of $1,200, which were exercised on June 18, a few days before the House subcommittee convened. The contracts gave Pelosi the right to convert his 40 call options into 4,000 Alphabet shares at a price of $1,200, because Alphabet was trading at about $2,550 when the options were exercised and converted into stock. They were in the money and are now worth about $5.4 million. Left out in the Bloomberg piece is an important detail. Mr. Pelosi had to make the trade. His options were set to expire on June 18, 2021, according to the disclosure report, the day when he exercised them. In fact, Pelosi only had two choices: sell his options, or exercise them. If he did nothing, his brokerage would likely have closed or exercised the options anyway. Thus, Pelosi's Alphabet trade on June 18 was an inevitability, whether the House subcommittee was meeting or not. Regardless, the trade is quite a windfall. Instead of some insider dope, he seems to have made a string of gutty trades that generated millions in profits. The options in question were acquired on February 27, 2020, just as global financial markets began their coronavirus-induced plunge. On that trading day, Alphabet fell as low as $1,314 a share, where it closed. Pelosi, apparently bullish on the company's search and advertising businesses, bought slightly in the money options expiring about 16 months later.